Talk about a rough day, not just for Tesla stock and markets, but for myself. 12 hours in the car is not fun, and that's why this video is coming to you guys later in the day compared to what we normally do. Now, same as usual, we will go over all of your Tesla stock breaking news, what happened today in markets, and what could be coming next for Tesla. We'll take a look at option activity, short position, all of that. And we have a lot of Tesla stock news today to get into, but first and foremost, we should start here. Ashok Alaswamy, he is the head of Tesla's AI program and specifically FSD. He writes on X, lots of work, but the team's aiming to get a feature complete for unsupervised FSD with V13. So with V13, Tesla is suspecting we will have, take your eyes off the wheels, full self-driving, which that opens the door to robotaxis and all of the other great endeavors that Tesla will ultimately pursue. But first things first, you have to get fully autonomous, full self-driving. Next up, Tesla's Cortex supercomputer. More of it is coming online today, and it's again being used to train FSD as we speak. In the last quarter alone, Tesla's AI training compute went up by 75%. Thanks to 29,000 NVIDIA H100 GPUs that they installed at Giga Texas. And this is something that will only get more productive in the coming days, weeks, and months. It's also being reported that with Tesla's FSD V13, Tesla will identify the sound of emergency vehicle sirens to know to pull over to get out of their way. FSD in the past has struggled handling emergency vehicles, so this should be a big improvement. The Alpharetta, Georgia Police Department has proposed buying a Tesla patrol car, admin cars, to provide the city's police officers a cheaper, more efficient alternative. They're actually considering spending $349,910 on the purchase of 4 Tesla Model Ys from Unplugged Tesla. Ford Patrol Explorers cost $70,629 a piece, and Chevrolet Tahoes come in at about $80,000. So this would be pretty similar to a Tesla vehicle, which is only about $80,744 outfitted to be a police vehicle. Also in some big news today, Ford will stop the F-150 Lightning production for the rest of 2024, starting on November 15th due to weak demand for its EVs. They will resume production on January 6th, which clearly this is a bad sign for Tesla's competition, specifically Ford, but it could be smart for Ford to do if they're just not selling as many F-150 Lightnings and they don't need to keep stacking up inventory. Edmunds said this about the Model 3 performance. They say, quote, everything else that we've tested that goes 0 to 60 in that time cost at least double the price. No fancy launch control needed either. You just mash your foot. Day-to-day drivability is excellent and nearly on par with the Model 3 long range, which is a serious compliment. The quality has improved significantly in this model. The seats and armrest even have French stitching and plenty of padding. It really feels like you're getting your money's worth here. I can't find any major panel gaps or obvious misalignments. Everything seems to be put together well and fits properly. Volkswagen has introduced a new month-to-month vehicle subscription service in the Atlanta, Georgia area. Customers can borrow a vehicle for as little as a month or keep it for as long as they want. Just have to give Volkswagen 30 days notice before you return it to the dealership. Volkswagen does not check your credit score or approve applications based on credit worthiness, which they're definitely getting their money's worth because this is going to be anywhere in the range of $600 to $800 a month, which is kind of expensive for a lot of your average vehicles. It's also being reported that a Delaware judge is considering whether a vote by Tesla shareholders reinstated Elon Musk's $56 billion pay package, which the court had voided, will try to issue a ruling this year, according to the judge's letter. This is from Kathleen McCormick. This is something we covered a lot when the whole Elon's comp package was was a big deal for Tesla, and I think it still is to a large extent, but it says here, quote, "I write to inform you that I aim to issue that decision before the end of this year." That's all she said. As far as broader markets today, this was in fact the worst Halloween that we have seen at least since 1985. Now, markets are not open every year on Halloween, so sometimes things do skip. Like you were open 85, 86, you were not open 87. 89 you were open, you were not open 1990, right? So things do skip around sometimes, but Halloween actually tends to be a pretty good day for markets. Not great, but good. On average, up 0.34%, the median return up 0.1%, and you tend to be higher about 67% of the time. Today, far from a good day. Okay, the S&P was down 1.96% to close out the trading day, clearly breaking down in a way that we have not seen in a while. And this really deserves further discussion because the reason for this breakdown largely has to do with big tech. It really all has to do with big tech. Earnings have actually been good. Earnings have not been bad at all. We will discuss Apple earnings here in just a little while. But Apple was kind of the weaker one. Google was good. Microsoft was largely good. Meta was largely good. There's obviously small little things you can pick out here and make a problem with there. But generally speaking, earnings were pretty damn good. There's a couple different things that are going on. The markets and these big tech stocks were kind of priced for perfection. So anything that's not perfect was seen as a disappointment. With that said, there was some areas that were not perfect. And the markets, well, they're going to punish that if big tech is, or has been doing as well as they have been. I think the bigger issue going on with markets right now is something we've talked about for weeks, if not months, and that is the election. Now, the bond market has been pricing in election risk. Stocks have not. And I think part of that has to do with big tech earnings. They're just such a large component of this market. A lot of investors didn't want to make a move before these big tech earnings were actually reported, because what if they were really good? What if they were really bad? Is the election a reason to sell big tech stocks? If they're going to massively impress on earnings, it just makes sense to wait until the reports are concluded to price in more of that election risk, especially because the election is next Tuesday and we have a couple of trading days still. Like, why jump ahead of pricing an election when the bigger catalyst is really big tech earnings, at least over the next couple of days? Hopefully that makes some sense. But now I think as you get these big tech reports that are coming out, they're good, not spectacular, not as great as some people would want them to be. Wall Street's starting to shift the focus to the election. That's what it seems like to me. Now, the big earnings today that really sent things lower was Meta. Meta was down 4% today, as well as Microsoft. Microsoft was down 6%. They really just gave inline guidance, if you will, for data centers. Like, it wasn't great, it wasn't bad, it was kind of mediocre, and the markets sent the stock down 6%. Any day you have Microsoft, a $3 trillion plus company, falling 6% is going to be a bad day for the index. And that happened to happen the day before, or really the day of, Apple earnings and Amazon earnings. Now, Apple and Amazon, there's a huge difference here. Amazon was much better. Apple was weaker. Even the most important metric of Apple earnings came in not good. That was services. Services missed. Everything missed on Apple earnings besides iPhone. And yes, on the conference call in which I had the luxury of having the time to listen to today, there was a lot of, I don't want to call it pumping because that sounds like a pump and dump kind of, stock. I don't think that's what it is, but it sounded like a lot of pumping in regards to AI. Apple referenced this new iPhone as really a change for the Apple company itself. And again, in due time, that will be true. But in the near term, that's not enough to get Wall Street excited when you have lackluster results so far for Apple Intelligence. The bulk of the features that average people are probably going to love, which is like editing stuff out of a picture or using ChatGPT to help integrate that with other apps, right? More mass market features besides just summarizing your notifications, summarizing your emails for you. Like that, is the average person going to subscribe to that service, right? For Apple Intelligence? Probably not. Okay. So the results were just not good enough to justify where Apple is trading at. And I think there's even more concerns with Apple than all of what we've talked about. Specifically, as you can see here, this article from Yahoo Finance says Apple earnings underline Apple Intelligence is key, according to this analyst. And they say here, quote, Apple hasn't really grown iPhone sales for the last 3 years. Expectations now are that it can actually grow at 5 to 10% for a variety of reasons, but really the important one is Apple Intelligence. The analyst notes that artificial intelligence features are key to Apple's growth. He says if they can't roll out these Apple Intelligence features in a timely way, if consumers don't have as positive experience as my early experience with Apple Intelligence has been, then it's going to be harder to compel people to upgrade even if there is an aging phone base. So basically what they're saying is if Apple Intelligence does not impress people, it does not push people to upgrade to a new iPhone, they're not going to upgrade to a new iPhone. And Wall Street's expectations of iPhone sales really picking up are going to be wrong. And that's a problem because Apple is really a no-growth company. And they're priced for growth. They're priced for a lot of growth. Now, Apple CEO Tim Cook says the adoption of iOS 18.1 is twice as fast as iOS 17.1 last year, which, I mean, is that good? I'm sure it's a good sign, but does that have any correlation to is Apple Intelligence going to be successful in the short term or not? I don't think you can draw that conclusion. And that's kind of, I think, why Apple stock is not reacting to it, because it just doesn't tell us enough. Apple CEO Tim Cook also says that Apple Intelligence marks a new chapter for our product. And I think Apple Intelligence is going to be wildly successful given enough time. If there is a company that will bridge AI into the mass population, it will be Apple, and Apple will be wildly successful. That will happen. But is it going to happen overnight? Is it going to happen even in the course of a year or two? Probably not. This is going to be a trend that catches on over the course of the next 3 to 10 years. But I don't think we should expect some huge upgrade cycle, because the iPhone 16 is really just the iPhone 15 repackaged with slight upgrades, like slight features here and there. It's not something that is going to compel people to go out and buy a new iPhone, at least not 10%, 5 to 10% additional growth there, right? Apple Intelligence is not going to be that. Yes, Apple did try to pump this up a little bit, and I do think they're being honest here. This is a new chapter for the iPhone, but it's just going to take more time than Wall Street wants to recognize. And I think that reckoning is starting now. Now, does this mean Apple needs to collapse from here? Obviously not. Apple, at the time of recording this video, is down 1.44% in after hours. This, in the grand scope of things, is really not a big deal. Okay, Apple's down to $222.15 per share. Like, is that the end of the world? Clearly not. But it's also not enough to really propel markets higher. It's just not great. It's not terrible. It's not great. The SPY is up 0.2% in overnight trading, and a lot of that really comes down to Amazon. If Amazon had bad earnings, things would not be nearly as good as potentially they look even now, and you're only up 0.2%. So let's give a rundown of the actual earnings from Apple. Revenue came in at $94.93 billion. Estimate was $94.36 billion, so beat a little bit there. Is that super impressive? Not really, but it's still good. Let's not totally downplay it here. EPS came in at 97 cents versus $1.46 a year earlier on a year-over-year basis. That was a big miss, but it really had to do with a big $10 billion one lump sum tax payment. The adjusted EPS, if you take that out, was $1.64, which handsomely beat the year-over-year numbers. Products revenue, $69.96 billion versus $69.15 billion, so they actually beat there in aggregate. iPad revenue came in at $6.95 billion, estimate $7.07 billion, so they missed there. Total operating expenses came in at $14.29 billion versus $14.35 billion. That was a beat because that's operating expenses, so they spent less money than Wall Street was expecting. That's good. Greater China revenue came in at $15.03 billion, estimate $15.8 billion. That was a miss. Mac revenue came in at $7.74 billion versus estimates of $7.74 billion. That was right on estimates. iPhone revenue came in at $46.22 billion versus estimates of $45.04 billion. So that was by far the best metric of Apple's earnings. The big reason why Apple is down, though, besides, Apple Intelligence not really giving us anything to hold our hats on, like getting very vague kind of references to how successful Apple Intelligence is going to be in the near term, because again, we didn't get much from Apple out of guidance, if you will, for Apple Intelligence. Services revenue. Services revenue is typically the most important segment for Apple. Like whether or not the stock goes up or down really hinges on services revenue. And services came in at $24.97 billion. The estimate was $25.27 billion. So this was about a $300 million miss. Is this the end of the world? No. Is this great? No. This is on the bad side. Or on the, it's not terrible, but it's not good, right? So when you have a situation like that, you get Apple down 1.5%, 2%. And that's honestly pretty appropriate. Wearables and home and accessories came in at $9.048 billion versus estimates of $9.17 billion. So that missed estimates, and Apple declared a cash dividend of 25 cents per share. So Apple earnings by far look the worst out of your big tech stocks, which is something I have been expecting. And if you wanted to look at the heat map from unusual whales, Nvidia was also down a lot. Broadcom, AMD, Qualcomm, Oracle, Microsoft, Palantir, like anything that has to do with tech got destroyed today. Amazon Q3 earnings, EPS came in at $1.43 versus estimates of $1.16. Net sales came in at $158.9 billion versus estimates of $157.3 billion. AWS, so that was a beat. AWS net sales, $27.45 billion versus estimates of $27.49 billion. So that actually missed a little bit. Operating margin came in at 11% versus estimates of 9.34%. Much better than expected. Operating income came in at $17.48 billion versus estimates of $14.75 billion. That's almost a $3 billion beat there. Physical stores net sales, $5.23 billion versus estimates of $5.17 billion. Decent beat there. North America net sales, $95.54 billion versus estimates of $95.22 billion. So that beat. And they see Q4 net sales of $181.5 billion to $188.5 billion. The estimate was $186.36 billion. So kind of meeting right there at that expectation. That is going to go ahead and do it for this video. In the next video, we will go over specifically what's coming next for Tesla stock and for broader markets, as well as some other things that I think you need to know. As you probably recall, on October 21st, I made the call for a 10% correction. That is from the all-time high. So a 10% correction would put you down to about 527. You've fallen so far about 3%. You're at a very critical level, and I think that's why the next video is important that you guys watch that, because this is going to be what could be the next step towards getting to that 10% correction level. So I'll leave it there. Let me know what you guys think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.